Good morning, guys. This is Ray from nextforextrade.com, and today is the 21st of August 2019. Just gone 6 a.m. here in the UK, and yeah, I'm here obviously to teach, not preach, about Forex. So let's kick off. I'm going to try and keep this one a bit shorter than the previous day session. So I'm going to pick just three pairs that I've picked from the market, and then also go over the two positions that I'm in currently. So let's just kick off first of all with the AUDCAD, which has some possibilities on it. So first of all, let's just have a look at what the daily saying. We've got our nice lower lows, lower highs, our standard deviation channel around the price. We've seen it encounter some pretty decent resistance here. Let's just see how far back that goes. So on a daily, there's good enough reason to consider this as a quite strong level of resistance. So this gives us context for our stop loss above these above these highs here. It's still within the upper half of our standard deviation channel as well, which is all good. So stops above this level gives us context. So now let's just have a look at the lower time frames to see how we might frame that. So we've got the 4 hourly on here. So the thing that's worrying about the 4 hourly is the way that we've still got this price, this kind of captured in this up move here, which is the retrace that we saw on the daily. But having said that, we can still see there's more contact points, some zonal support and resistance here, resistance here. So it still stacks in terms of having our stop loss above these levels here, but ideally we want it to break outside of this standard deviation to the downside, which would also mean, if we look at the daily, it would mean a move past the low of this candle here. And that's just more of a better approach to trade in terms of risk management, because the price would have shown its cards. It would have shown us that it's moved firstly away from this resistance and moved past the low of the previous day's candle as well, and also breaking outside of our standard deviation channel. So we're kind of stacking up the evidence in our favor that the price could go the way that we'd want. In terms of timing the trade, you could look to these lower time frames as well. These are quite flat at the moment. The hourly, 15, 5, they're all very flat, and really the troublesome area, the reason not to enter this just yet as well, is this support that we're seeing. So we use the hourly for this example, but we can see this support here is pretty strong, and it still has the context as well. If we look at our standard deviation on this most recent move, of finding support off of our lower edge of our standard deviation as well. So really a break past this support would be a first good sign. A break past the day's low. So let's go back to the daily. A break past this low here. So let's put this in and find out what level this is on our hourly. Okay, so it's these lows here. So if you were to trade this today, consider waiting for the price to break this kind of low here. So that's about it's bang on the money, psych level. So 0.9. So that's another reason why there could be quite significant break at around this level as well, because it's a psychological level. Round numbers have a tendency to have bigger reactions. So looking for the price to break on our lower time frames, and in doing so it should start to show lower lows and lower highs. And as I've discussed in the other videos as well, we could use the standard deviation channel to guide our entry, looking for a pullback to either our average of the standard deviation or the upper edge, seeing a reversal candle for that to allow us to enter that trade. But not quite ready yet, but has the potential if those criteria are met. So the next one that we're looking at is actually it's another Aussie cross, which is going to be a very similar setup to the one I've just discussed. So the price action on this is, you can see it's almost identical. Let's just have a look. Please. I mean, the price action on this is actually better, but here we can read into this as well, in that this level here has again been quite a significant area of resistance. We've seen it struggle to get much higher. This extreme low, as I discussed in yesterday's video, is quite a significant level to consider, which is why we've seen it come up and test so many times. It just interacts with that previous extreme that the price just reacted at. So in terms of our stop loss, stop above these types of levels makes sense, above this resistance. And on the 4 hourly, we can see that the most recent move here is captured in our standard deviation channel, giving us context again that the price around this region here, because it's interacted with the horizontal and the standard deviation upper channel, those are 2 points of evidence that the price could struggle to move higher. So really the thing to look for on this is just some significant moves lower on our lower time frames, like the hourly and the 15-minute. So certainly a move past yesterday's low on the daily would be good, which would be a break of this support that we're seeing here on the hourly. I'm taking this example. So a break past this low, get rid of that. That would be the first sign that we're looking for. And again, using our standard deviation, obviously as it moves along, this is going to be able to extend further, and you could time the entry based on, again, a reversal off of our average of our standard deviation or the upper channel there. And that's good for I mean, the reward to risk on this could be pretty good, because with a 1-to-1 reward to risk, I'll stop above there, entry around here, 1-to-1s around here. So the areas to really think taking profits off the table before these lows is one approach, because these lows also encounter where our average of our standard deviation would be as well. It's probably not something that's going to be hit in a day. It could be, but it may not. So maybe something you need to hold for a few days to, as a swing trade, but also certainly the profit potential to see it move down to these type of levels is also viable as well, if we see the price action on the lower time frame show that. So we need to see those lower lows and lower highs. So what's the last one we're going to look at? So the last one is the USDJPY. Same type of story, where we've seen the high time frame, the daily, show lower lows, lower highs. It's come back in a retrace, met with a lot of resistance as well. And the lower time frames are slightly different price action on this. We can see on the 4 hourly, we've got the price captured in our standard deviation channel to the upside, which is this retrace here. And if you notice as well, another kind of formation that we're seeing here is a like a symmetrical wedge, if you like. It's a chart pattern name, where it kind of coils up. And when you see this, typically it has a tendency to break to the upside, move higher, or break to the downside. Now, because there's some momentum that we're seeing on the daily here, I'd be favoring a break to the downside in this instance. So the way to kind of play this, I would say, same thing that I was saying on the other time frames, wait for it to take out the previous higher low, which in this instance, come on, let's blow this up. In this instance is this low here. And that would be good, because it would be showing us that it's breaking out of, if you like, the the symmetrical wedge that we saw. Let's draw that back in. Okay, so it'll be breaking out of this to the downside. It would also be breaking out of our standard deviation channel, the support that was giving to the downside in this move, and it would also be breaking that lower support. And just looking for, you know, confirmation of that on the lower time frame, so the 15 and the hourly. Same concept. Time it by waiting for it to break first of all, and using a standard deviation channel, for example, to just get, you know, the good value for money. So waiting for it to break. Let's zoom in a bit more. Come on. So waiting for it to break these lows here. So to move down and then to pull back and interact with our average on the standard deviation channel or the upper edge. So reversals, not just interact. I should clarify that, not just interact with it. So it shouldn't just touch it. It should be a candle, a reasonably small sized candle that interacts with it and then entering it when the price moves past the low. So those are three setups to consider for today. And let's just have a look at the positions I've got in as well. So I've got the Aussie dollar and the euro. So let's have a look at the Aussie. So this is one that I've been in for quite a few days now. Scaled into this. So it's my maximum risk level, 3% on this. It's still not decisively moved in a direction that I wanted, but this is really just one of those cases of knowing when to hold them, know when to fold them. There's nothing wrong with this trade, even though you can see, let's just have a look, these are still running at a loss. My positioning on this is fine. It's, you know, I've still got a very like sensible, if you like, stop loss above the high of these previous resistances outside of our standard deviation channel. These are very kind of toppy type candles that are encountering the resistance, and you know, if I am right on this, the potential that I'm seeing to the downside on this is you know, there's some good scope for it to move, you know, into interact with these lows potentially and beyond. I mean, I've got my take profit there. You know, speculatively, that's about it's about 2.5 to 1 when you work it out in terms of reward to risk where it is now. But what I'll be doing is, if I do start to see the price move on our lower time frames, you can see this is an hourly. These are very, you know, choppy at the moment. So the hourly isn't really guiding my trade just yet on this. It's more the 4 hourly and a daily. But what I'm anticipating is that the price starts to drop away and start to show those lower lows and lower highs on our you know, hourly and 15-minute as well. Yeah, I'm happy to stay in that, and I will update you as and when that closes out, even profit or loss. And lastly, we've got the euro. So euro is one where so our daily, you know, clear signs of bearishness. What's not so great at the moment on the daily is the way that it's kind of halted at our the average of our standard deviation channel. It's kind of finding support, but it's very I'm still optimistic, if you like, for further bearish move, because it seems to be finding resistance off of this level, which is kind of goes into the narrative of what the 4 hourly is saying. Because our 4 hourly, we do have some, you know, textbook lower lows, lower highs, and our standard deviation channel around the price here showing at the moment it being slightly overbought, even seeing reversal candles and interacting with this resistance as well at these levels. So this is good. My stop at the moment, it's a protective stop, so I'm not unless anything drastic happens in the market and it jumps over my stop loss, it's protected profit. So it's a protective stop. It's about £30 more or less that I will gain if the price action goes against me, and to the upside it's just over 100. I have moved this down just again based on the price action. So I mentioned in other videos, really it's about for me it's good having arbitrary take profits and stop losses to start with, but really the way that I prefer to kind of take these trades is to let the price action determine when I get out. So I've got this in, if you like, speculatively. So if there is a massive move in the market, yeah, I've taken profit off the table. But really, if I'm around and I can see the price action kind of developing, then there may be instances where I move this take profit down to kind of capitalize on a bigger move. What I'm not doing is moving my stop loss further out. Right, I've moved it in, so I'm protecting profits, but I haven't moved it out. So on this trade, to start with, the maximum risk that I had was 1%, and I'm not going to increase my risk beyond that unless I'm like in the other trade where I was scaling in, and I know my overall risk that I'm willing to put into any one trade is 3%. That's a different story. But the important thing is here, on any one position, I'm not increasing my stop loss to give it more wiggle room, because from the outset I've done my thinking in terms of determining where I'd be wrong on this. Initially, I had my stop above these. I think it was just above these highs. Let's just see. So I can tell from what so I structured it so that my stop when I first got into this was above these highs, because I was deeming this as a lower high, and should the price come round and start to test those levels, then I'm wrong, because if it moves past that, then it's going to start creating higher highs and higher lows potentially, and I want to be out them. So this is just the way that I'm kind of protecting my money. I'm not moving my stop to increase the risk. I'm moving it to protect profits in this instance. So yeah, that's it for today. I'm trying to just play with the format. So just waiting for feedback on whether you prefer me to go through the entire market like I did in previous videos, or just pick out the best ones that I spot and discuss those. So if you have any preference, just leave a comment below as well. Don't forget to subscribe, and I'll be back again tomorrow. See you then. Bye.